Well, the economic slump has intensified in the U.S. with a series of weakening economic data being announced recently. Mike Patterson takes a closer look for us.
The world financial crisis has taken a heavy toll on U.S. economic performance, hitting various sectors across the country. Data from the U.S. Commerce Department shows that the U.S. trade deficit narrowed 4.4% in September to around 56 billion U.S. dollars. Imports showed their steepest drop on record of 5.6% to 212 billion U.S. dollars. While exports fell by the biggest amount since September 2001, plunging 6% to 155 billion U.S. dollars. Analysts say the trade data is a reflection of the financial meltdown triggered by the collapse of investment bank Lehman Brothers. Detroit's big three automakers are asking for a bigger bailout. GM, Ford, and Chrysler have already received 25 billion U.S. dollars in federal loans. And now they need another $25 billion to get through the economic crisis and the worst sales slump in more than 25 years.
A lot of people that used to work for the big three were laid off. They moved down south or a different state and, find another job. And this really impacted us. All the small businesses are very suffering right now.
Some analysts say GM's ability to make it until Obama can help will probably depend on its trade creditors or those that provide parts and raw materials to make cars and trucks. In other news, figures from the U.S. Commerce Department indicate retail sales slumped 2.8% in October, signaling retailers may be facing the worst holiday shopping season in decades. In the United States, consumer spending accounts for 2/3 of overall economic activity. The bigger-than-expected decline creates a greater risk of a recession. Meanwhile, December crude futures closed at 57 U.S. dollars a barrel this week on the New York Mercantile Exchange. Energy demand concerns prevailed, pulling futures prices 6.6% lower for the week, their second weekly decline. And prices are down more than 40% for the year to date. Many oil producers are slashing production quotas, but some economists also fear that the resulting declines in exploration and production by oil firms will lead to a massive price spike when economies rebound. And U.S. stocks dropped for a second consecutive week as a record decrease in retail sales and weaker demand for mobile phones raised concerns about the depth of the recession. Mike Patterson, CCTV.
And staying with the U.S., lawmakers there say they're dissatisfied with the Bush administration's latest change in implementing its $700 billion bailout fund. Congress says the move is sliding homeowners on the verge of foreclosure. Zhang Yajing has more.
At Friday's congressional hearing, the U.S. Treasury Department was put under intense scrutiny on why it has not used any of the money to buy distressed mortgages. Instead, it has been handing out billions of U.S. dollars directly to banks. The panel said the Treasury Department has abdicated its responsibility to prevent home foreclosures.
How do you reconcile these policy reversals? And why won't Treasury act swiftly and forcefully to maximize assistance to homeowners under TARP and play a significant role in modification of home loans at risk of imminent default? Why not?
Blamed for not acting in the interest of homeowners, the Treasury defended the shift. It says both banks and non-banks may need more capital because of their troubled asset holdings, continued high rates of foreclosures, and stagnant global economic conditions. And it believes restoring stability to the overall financial system is the best way to help homeowners. Congressional dissatisfaction is significant because Congress can block release of the second half of the rescue money or put new conditions on its use. Congress is worried that the bailout money is being used indirectly to fund the payment of bonuses, compensation, and dividends by financial firms. Democrats are also pushing for inclusion of funds to help the auto industry. Zhang Yajing, CCTV.
And the